Okay, so welcome to our very first panel debate as part of the Pepper Presents series. In this debate, we'll be discussing what do customers really want from their broker partners in this changing landscape. I'm absolutely thrilled to be joined by three very influential industry minds of the mortgage industry. So I'm delighted to introduce to you Craig Hall, who's Head of Broker Relationships at Legal & General Mortgage Club, Matthew Arena, Managing Director of Brilliant Solutions, and the one and only Tony Nunn, National Sales Director of Charles Darby. So, gents, so Craig, if I may start with you, what do customers really want from their broker partners?
I think right now, I think it's that open, honest, transparent, and I think the key thing is independent advice. It's a bit of a minefield out there at the moment for customers for a whole raft of reasons, with people being on furlough and challenges in the workplace. Obviously, we know that the landscape of mortgages is not what it was pre-COVID. So I think more than ever, the value of advice, and in particular independent advice, is absolutely shining through and is required. And I suppose the other thing is, high levels of communication. That's something that certainly we've done, and I know you guys have done, during the lockdown period, in terms of what the state of play is, between us as a community. And I think that's absolutely imperative for brokers to be regularly engaging with their customers, to keep them abreast of what's going on in the mortgage market, the housing market, and how they can help, and obviously different ways in which they might want to transact as well, being a bit more flexible in their approach.
No, I completely agree. And Tony, how do you think customer expectations have changed this year as a result of the pandemic?
Well, I don't think the expectation has changed greatly. My experience is that you always get what you put out. So if you're going to manage a customer's expectation of what the conditions are like, what I try and get across to my guys is that you must be open, honest, and transparent with all that you deliver. So if you manage an expectation and then give a rationale, so for argument's sake, if you've got a client who says, look, I want this done yesterday, you have to manage their expectation in this market and say, well, you're probably not going to get that, if I was completely honest with you, because then they have to understand that like everybody else, a lender will have staff who will be furloughed and all the rest of it. And so if we're all working from home and adapting and the process is slower, that's what you need to convey. If you tell them no problem, it'll be a whistle-stop tour and it'll be out in a week, you get what you put out. So, expectation from clients, I think, in this marketplace is that is led by perception. So I've handled some of the inquiries because I like to do that, as you know, Carol. I like to dip my toe in. When we get a web lead in, if I'm available, I like to make contact with that client and see what they've heard. So some of the shocking things are that this is the way it's always going to be. This is what I've been told. I need 20% deposit. I need 25% deposit. And then you look at the inquiry and you look at what it is, and it's shared ownership. And I'm thinking to myself, well, do you? Who's been telling you that? So the reality is that their expectation, really, because they're not very knowledgeable, that's why they come to brokers, is only what's been put out there. So you have to really manage their expectation. I think they all know it's tough, but if you try and educate them as to why it's tough, they're very accepting of the situation, and then they're very thankful that you've been open and honest.
No, agreed. And Matthew, so we've seen, like, for example, in the financial crisis back in 2008, and also with signs from lockdown, that customers have become a little bit more frugal and being careful on what they spend. So how do you think this will transfer to their mortgage needs going forwards? So do you think there'll be a change in the mortgage requirements from a customer?
Well, I think that in terms of the frugality, there's a real mixed bag for a start, Caroline. We're seeing a number of people actually doing a lot more online shopping than they were, kind of making up for the lack of social activity in other ways. And that's certainly the case for the more affluent borrower. I would say they're not worried about their money, even in this environment, and they're spending it. If anything, I think the importance of the mortgage itself has increased. More people are working from home. Look around the people on this call, and nobody looks like they're in an office. So it's the importance of working from home is only increasing. The importance of outside space, and I think that is shifting people's focus from the expenditure that was unaffordable, unsustainable before. I think those people are having an about turn on what they've been doing, and I think there'll be a greater focus on the mortgage. I don't think that people's frugality now will be helping in terms of ongoing lender affordability, just because of the way that lenders assess affordability at the moment, and historically that they haven't had the manpower to go through that on scale. There will always be exceptions, but as a whole, I just think that the public at large are putting where they live. It's also now for a lot more where they'll also do a lot more work. I think the importance of it has just gone up.
What do you think, Craig?
I was going to say, Carl, yeah, we conducted some research, the L&G Mortgage Club, during lockdown on a select batch of customers ranging from potential first-time buyers through to movers. And our research, and this was obviously pre the stamp duty changes and bits and pieces that we've seen sort of put the market into superdrive, as it were, has actually shown that pre-existing plans to buy a home have actually sort of been brought forward, and actually a number of people during lockdown were obviously, I think Matthew touched on it there, reduced spending because they weren't commuting, they weren't buying the usual coffee and everything else that and sandwiches and what have you. So some of our research suggested that for the majority of first-time buyers, about 54% of them, the pandemic had actually made it easier, with a fifth of them saving between £100 and £200 extra a week towards their deposit requirements. And a number of those have brought forward their plans, as I've mentioned. I said this was before the stamp duty changes. So again, that's probably further enhanced that ability to do so, with not having to find up to 15 grand. And I think the other area as well is around landlords. Again, we're starting to see a real uptake there of inquiries, particularly around our Smarter Criteria, our search tool, where I think at the moment first-time buyer, first-time landlord searches have increased fourfold since April, and things like holiday lets and Airbnb and things like that have also seen a significant uplift. There's clearly more and more people are opting to stay for a staycation in the UK rather than go abroad. So, at the moment, it's we're starting to see different pockets of the market, certainly pick up. I think if you think back to the last few years, we've had Brexit. Obviously, a number of people sat that out and waited to see what was happening. Then the general election, and before all this, 2020 looked like it was going to be an absolutely stormy year. And then we went into lockdown, and I'm sure everyone on this call were revisiting forecasts for the year and what have you, and we just didn't know what we were facing into. And then obviously lockdown lifted, and bang, the market's been mental ever since. So yeah, it's I think at the moment it's a booming market, and but I suppose questions are sort of beyond April next year, really.
Yeah,
Caroline, I would just to touch on some of Tony's comments about expectations changing. I think it's one of the hardest things that brokers have to deal with at the moment is the real mixed expectations, and it's always been the case. We talk about clients as being clients as a general bunch. They're all individuals with their own little bits of knowledge, and a little bit of knowledge is a dangerous thing. To give you an example of the different expectations that we see out there, there are plenty of landlords who are refinancing, raising funds ready for a property price drop. They're waiting for prices to fall. And you've got other people out there who are happily investing in property right now for their own personal needs, and are more than happy with the way that the house property market is standing up. And look at the data that we've seen from Halifax on that. So there are real mixed messages out there, and every client a broker speaks to will have a different set of expectations and perceptions in their head. And I think now more than ever, it's harder to do all of the things that Tony said, which are absolutely bang on, but the broker's life's got a lot harder on on all of these fronts. It's very difficult to provide clarity, from the outset and manage those expectations. Brokers are doing it, and they're doing it well, but it's got harder right from that initial point of contact with the customer.
And the problem, some of that problem, Matt, is because it's the perception and the opportunities that are out there. So just picking up on some of Craig's, we've seen first-time buyers, really, and I think that is because frightened, or the expectation is if they don't act now, they won't get one. Also, to some degree, and it depends on locality, but to some degree, it's because if you're paying rent, and certainly the closer you get to London, the more you'll be paying through the nose for it. If you get closer to the rent situation, it's more affordable if you actually purchase a home. Yeah, because for some people you can spread that cost over 40 years, so it's seen as a saving. The landlord piece, we've seen a massive increase in landlords, certainly in and around where I live, and Kent and Essex locations, and that's all about opportunity because valuations are 20% under. So therein they see an opportunity to buy a property at below market value, without calling it below market value, because that's what the valuers are coming back with.
Yeah.
Holiday lets. If you go on the Charles Darby website, you'll see that we adapted some of our website to cater for holiday let. And at the moment, we've got pay-per-click campaign running and organic searches going on, and massive increase in that scenario because people have got entrepreneurial mindsets, and it's an opportunity. If nobody's going abroad, they must stay here. If they're going to stay here, I would like a piece of that, and I could earn money besides because my income's in danger at the other end. So it's absolutely what's going on. But perception and is everything really, and if you want to change their perception, the industry has to put out a message that they understand as to the mechanics of why this is.
I think that's right, Tony, and that goes back to that first question, Caroline, that you asked, about what customers are looking for at the moment. They need somebody to really put into context all of the different messages that they're getting out of there, all of the different opportunities for them, and sit them down and really get advice from a trusted source that they can rely on in these times to deliver what they want and what they need. And sometimes that might be now it's not the right thing for you. But I think that is harder than it has been for a long time.
I think we're in a bizarre situation, aren't we? That, as I say, we've had all this pent up demand that has been further stoked up by the stamp duty holiday at a time when actually the mortgage market, the lenders aren't really equipped to deal with it. With lack of high LTV lending. Obviously, as we know, like everybody else, lenders are having to work from home. So there's operational challenges, payment holidays, the onboarding of payment holidays, and currently going through the offboarding. So, and clearly with some of the things we've already touched on around furlough and increased underwriting, everything is taking longer. We've got a market that is not as widely open or available as it was pre-COVID, an increasing reliance on the bank of mum and dad. And, I suppose, even more increasing reliance on government support with things like Help to Buy and shared ownership, where you've got, only a 5% deposit. So it's, as you say, trying to cut through some of that. And you see some of the headlines in the national press around certain lenders taking certain stances around gifting deposits is not particularly helpful. Lenders are having to make some difficult decisions at the moment around criteria to stem the flow. And we welcome the fact that some of these lenders are still in the market at 90%, but they're having to sort of pick and choose what they do. It's a very delicate sort of balance, isn't it? So, yeah, absolutely echo all the points. It is around communication and really understanding the client's needs. And I think, again, you mentioned about expectations and requirements. I think, a lot of customers' requirements have changed, as we've said, around their housing need. I think not only is it about working from home, but I think, we were talking earlier offline about being in lockdown, and all those people that were stuck in flats around city centres without a garden during those months of lockdown would have found it quite difficult, I'm sure. And some of those people may have been reassessing their housing need over that period. So actually, I want to move a bit further out the city and get somewhere more affordable with a garden and so on. So, again, you've got all of these things that are stoking up that demand against what is quite a challenging time in the mortgage market. And I suppose, let's face it, as a broker, when we're all facing into the market at the end of March, early April, not knowing how long this lockdown was going to be, I'm sure most brokers would take the current climate than what we were looking at in April. But it is challenging for everybody, that's for sure.
So do you think we're going to reach our mortgage forecast that we had at the start of the year then, Craig, based on all the volume?
We've reforecast so many times. I think there's been so many twists and turns and unknowns. We at the club at the moment are about 6% down on last year, but we've also seen some record weeks in recent weeks. That just shows you, how the market has turned very quickly in the last few weeks and month or so. So difficult to say. I think, will we hit the figures that were forecast? I'm not quite so sure we'll quite get to the figures that were forecast, but we may not be as far off as we thought going back to April and May.
What about you, Tony? What do you think?
Well, we've seen a mishmash of results. The last 2 months for us have been record numbers on written, which is fantastic. But does that translate to money in the bank? Certainly not. And some of that is lender lag. Some of that, I suspect, is perhaps even the network sitting on a few bob. They're not on this call, are they? So the thing that really made a difference to us is that going into COVID, we had a massive pipeline, and we lost 45% of that pipeline through, inability to get into properties, to take the valuations, chains collapsing, lenders pulling out, just alterations in pipeline. And so that hit us quite hard over the last few months, because what we were expecting to come in didn't come in. But actually, because of our written business since May, then I think that actually we're in for a bump at Christmas, because that's the life cycle of when the money channels through. Most of our results this year have been written during COVID, which is quite strange. And I'm just hoping that pipeline stays live, because it should do, because it's written under COVID terms. But it's a bit of a mixed message for brokers in general. But I think what you have to do is you have to learn to adapt to your conditions, market conditions. So there are certain genres of business with low LTVs like Rio, later life lending, equity release, which won't have changed. And so the reality of that is, if you know what you're all about and you've got the ability to switch what you do because you're suitably qualified, appropriately qualified, well then I think you're a winner.
Yeah, agreed. Matt, can you give us any tips to brokers helping to serve their customers right now in this pandemic? I know we've had some really good tips, but is there any ones that haven't been mentioned so far?
No, I think that the tips are really, this is really awkward, because I think it's back to basics in many ways. I think that brokers' jobs have got harder, and as a result, they go back to that managing the client's expectations, communication touch points that you would have had before that might have been driven by actions. They need to be time-based now. Absolutely. There needs to be an understanding and an acceptance A bit like, again, before we started recording, we were talking about lockdown, and there's that initial frustration about lockdown, isn't there? And then we realize we've just got to get on with it. And I think that's the place that brokers have got to come from with this new way of working. Yes, it will change, it will improve, but it needs to be embraced. And all of the things that they know and they have been doing, they've all just got a lot more important. And I would say the big point on that is actually looking for problems, because more and more cases are now being looked at by underwriters, extra questions, extra bits of information being requested, and with the service times that we're seeing from a wide number of lenders, I think that brokers need to look for those in advance, and that's always been sensible. That's always been the best way to go about your business. But I think those mistakes now are costly in terms of time and effort for everybody. So I think go back to those. Change your systems and processes in terms of how you're communicating with customers. Embrace the change. And the last bit for me, Caroline, is how important are brokers now? I think brokers are tremendously important, always have done. But in this world, wow, surely the value of a broker has increased. And for me, brokers, it's a great time to use what's going on and just how much work is being done, just how much information they've got about the environment, the product changes, the service standards, never mind the actual detail behind the actual advice. I think brokers can provide, well, they've always provided a lot of value, but it's show that value to the customer, engage with them, because this is the time to really lock those customers into you for the long run. You help your customers through this type of period, and you've done an absolutely fantastic job for them. That's how you build your business. That's how you get your referrals. So I think embrace it, broaden, demonstrate, show that value a bit more. Don't take it for granted, and do all the good things that you do, but just maybe step back and think, do I need to change it now in this new world?
I completely agree. Craig, anything from you?
Yeah, absolutely echo everything Matthew said. I wrote an article in Mortgage Strategy not so long ago about have a little patience. I think that goes for everybody. I think there's been some finger pointing going on over recent weeks, and some comments on social media, and lenders have gone through some difficult times, as everybody else has, over the last few months, and there's been some more lenders that have stood out more than others, if you like. And now is not a time to be pointing fingers and shouting at BDMs or call centre staff. It's having that patience. I think it's, what we're hearing as well is that there's lots of calls from brokers going into lenders about cases, which then just slows things down. So actually, what I would say is, as Matthew said, is, do all the things that you used to do well. What is that lender's packaging requirements? Has that lender's packaging requirements changed since COVID? Utilise your BDM. Most of them are available probably more easily now, readily now than they were before, because a lot of them are still working from home. Package right first time. I mean, it goes without saying, if you want it to come out the other side quicker and get to an offer, then again, look at that lender's shopping list and get it in right first time, and you'll get the right outcome quicker. Things are going to take longer at the moment, as we've already said. Cases are taking longer to underwrite. Lenders are having to get the microscope out and go over the bank statements and accounts and pay slips, etc., in far more detail. So, again, it goes back to something Tony said at the start. Managing expectations is absolutely key right now.
No, completely agree.
Caroline, can I just pick up on that in terms of the volumes side of things as well? Because as Craig just mentioned there, it's taking longer, and I've made the point a few times. I think it's hard. It's harder work. Volumes for in general are high. Interest is high, but also we're seeing a lot more of the product transfer, lower margin business, and certainly from our point of view, we had a record July for completions, record July, record August it will be as well. We already know that, but margin is down, and that is not something I'm worried about saying. Margin is down. The higher value business isn't coming through. The higher value business is the riskier business, right? That's always that's always the way, and that makes a lot of sense. But if you apply that to the brokers world, the brokers working really hard at the moment. They're really hard, and what we've just said is they're going to be working harder for longer now. The lag is longer. Tony mentioned the lag in activity to income. In his business, the lag is significant. So I think we've got to acknowledge that that's the world for brokers at the moment. They're writing plenty of business, but they're writing lower margin business that's taking them a lot longer to get through. So that, I think, is something that it's always good to have plenty of business. The wolf's not going to be knocking on the door, but I think it is a different in terms of lifestyle for brokers. I think things have got a lot harder for them, and that won't be the case for all. But I think in general that's what the broker space is seeing. So I just wanted to mention that as we talk about how hard it is, and the volumes and what's going on in the market. But I think that's what it looks like for most brokers.
So what can lenders do to support brokers and customers, obviously, in this?
Actually, Caroline, I've got a couple of tips for you.
Go for it, Mr. Nunn. Go for it.
So last week, CDMB, Charles Darby, did a couple of road shows. We split over 2 days so we could get all our advisors to attend, just because lockdown has prevented us from travelling all over the UK as we normally do. And we delivered our very first virtual roadshow, which was an absolute IT nightmare and very funny. We all had a really good time. But rather than the plethora of lenders that I tend to drag around the country with me when we do a roadshow, I decided to take a different spin. And I invited a social media specialist and a business coach to deliver 2 presentations. And I have to say the response we've had is phenomenal from our guys. But, just on the social media piece, if you're always used to face-to-face networking, however that is, B&I, call it what you will, and you can't do that at the minute, you have to learn a new skill set. There's absolutely nothing wrong with marketing what you do, getting your face out there, because if your quality, the quality shines through. So some of our guys don't know how to do that, but they're being taught. With regards to a business coach, it goes back to the value. What I asked the guy to deliver was a session based on value. What value you add to your clients? And that was probably the best session of all, if I was honest, because it only then dropped into their heads the actual value that they do offer clients. But, you have to do a really good fact find with a client. Fact find is not at all doing a bit of business, as I put it on the roadshow. I said, if you do a good one, you'll do a lot of business, but you get a lot of business from the same client. It's the value that they can add, and it's the value that people buy. So I think
spot on.
That's what you need to get across. What value do you add? If it's just a fee because you're arranging a mortgage, well, how do you position that to the best of its, best picture? The other thing we introduced at COVID was, if you go on the front page of our landing page on our website, we'll see a great animation of a little diary. And we now, rather than inquiries, we actively invite clients to book an appointment, to book a video appointment, because, sending out the information, talking on the phone and sending it by email is a really tricky combination of things to do, and make it believable for a client. I'm very old school, as you know, and lots of people want to see the whites of your eyes. So, the reality is, if you do it via a platform such as this, even with screen sharing ability, not only can you have a virtual meeting with your client and see them, they get to see the whites of your eyes, you can also present what you would ordinarily deliver on a face-to-face. Makes a massive difference, you know, than a phone call. It really does, because the client's buying to that. I would absolutely echo the packaging bit. You know, if you've been sat in a queue for 10 days and then they look at it and they go, well, where's this? And you go, I forgot. You know, go to the end of the queue. Why make that 10 days, 20 days, 30 days? Do it nice, not twice. And the other thing that we did was we moved to digital conveyancing. And, you know, COVID, lockdown, if you can't make the journey to a local solicitor, does it really matter where the solicitor is as long as they know what they're doing? Yeah. If you do it all digitally, we haven't got to go anywhere. And that makes a difference. And, you know, and we're a business, so it's also about securing the business, because they can do it with me and they can do everything else, you know, digitally. So it just makes a big difference. Those are the things that I think, if a broker really wants to get himself out there and maintain the level of business that he does and prove who he is, that's what they need to be doing. They need to think differently.
Yeah. Wow. Blown away. All the really useful tips. So is there anything that lenders can do to support our broker partners more?
Can I join in on that one first? Because in all fairness, it leads on from what I've just been saying. And my biggest grumble with lenders, and I appreciate you're a lender, but my biggest grumble with lenders is this: you know, you treat the relationship with the broker. Yeah. And what I think you need to remember sometimes, not you, but lenders in general, depending on who they are. I love Pepper, you know that. What you need to remember is that there's a client at the heart of everything we do.
There is.
And when we've finished with it, it becomes your client, a lender's client. And first impressions count. And yes, they'll accept their rate or their introductory period, but you would want to hang on to them as a client. And if the first impression is really poor at the front end, then actually, you know what, come the end of rate roll off, you're going to lose that client. And I don't think that lenders always look at the client journey, the whole client journey. They see it up to the point that gets in front of them. But actually, you know, if you want to build a relationship, because relationships are key in any business, you know, you've got to put your best foot forward, as does the broker and the packaging and all the rest of it. But, you know, time lags, 25 days to get to a case, 8 days to pick up an email is ridiculous in this day and age. I accept there are less people to do it though, and these conditions are exceptional. But even without COVID, there are some lenders out there who take 6 days to look at an email.
Wow, no, very valid point. Craig, what about you? Any thoughts on what lenders can do to support?
Yeah, you know, I touched on this earlier, that again, communication. We've seen in recent weeks where products have been withdrawn at very short notice. We've seen other lenders change criteria and policy after a case has been submitted, so it's pre-offer, which then in turn requires rework on the broker and effectively starting again. So I think, you know, communication in a timely fashion, publishing the service stats as Matthew talked about, not on a, you know, last week's figures, because last week could be already out of date. Can we have a daily update on time to valuation or time to assess the case, time to val, time to offer? So, you know, people are fully in tune and aware, and again, able to manage their customers' expectations accordingly. I think those are the key things, really. Thanks.
Matthew, anything from you?
I would echo the communication point. The notice is really, really important. I think there's been a lot of assumptions made by lenders about their stance at the moment. A lot of anger at those in 90%, a lot of anger at those not in 90%. And I just think it would be great for lenders to come out and talk about the detail on why they are in and out. I think that communication has been pretty poor with the broker market. I think that it's something that we understand, but don't forget that the broker, as Tony mentioned, has got to convey this to the to the customer at the end. So notice on product changes is essential. Consistency, Caroline, is my big one. Consistency. If you're going to have poor service standards, I'd rather we knew and you were communicating those to us, and that when we sent something in to be looked at in 6 days time, 7 days time, or whatever it's going to be, if that's the case, and if you deliver on that, that's a manageable experience for everybody, albeit a poor one. If by the time it gets to you, oh yeah, well now it's 12 days, how on earth is a broker going to manage that with the customer? So I think that I really love Tony's point about, remember, there's a customer at the end of this, because that customer may be trying to buy a house or under a whole heap of pressure at the other end, and too many lenders are running processes without any kind of thought for that kind of consequence. So I really would like, and I do appreciate the difficult times, I really do, but I think consistency, more notice on some of those changes. The pipeline for criteria changes can't be that bad, so as not to just deal with the pipeline that you've got on that and then make the change the following week. Let's give people notice. Let's work with the customer at the end of the day. It's not really about the broker, it's about the customer who's going to go through a tortuous experience with all of that. I think brokers understand, they get frustrated, but they understand more. Let's remember that point that Tony's saying, that that there is a customer at the end of it. And the last bit is product. That's what brokers are crying out for at the moment. We've spoken about demand. Demand is there, but I really have to say that the brokers are crying out for product in various different guises. But I do know that the lenders are doing what they can on that space, and we've all learnt from the past times of irresponsible lending, if I want to use that term. So I'm kind of side with the lenders on that, but I do know that there's a big call for more in the higher risk categories. But I do understand that that's something that is difficult to deliver.
No,
just to add to that, this is not a credit crunch. The lenders want to lend. This is not a liquidity issue here. Most of the big banks are telling us that they want to lend at 90 or 95%, but they just haven't got the operational capacity. They didn't have during lockdown, and then we've come out of lockdown, and as we've said, the market has gone on super drive with the stamp duty holiday and pent-up demand. So it's not a desire from the lenders, it's not a lack of desire. The desire is there, the funding is there. It is just an operational. This is a human or a health crisis, which in turn has had the operational effect, and not a credit or liquidity issue. So it will come back in time, but obviously we've all got to adapt to this new working arrangements, and hopefully as we move through the second half of the year or into Q4, we'll start to see some higher, not just one or two lenders in and out at 90%. We need a few coming in to take the strain, don't we? So we'll keep everything crossed on that one.
Yeah, that's right.
I think, with the demise of furlough in October, hopefully that excuse will dissipate somewhat, with regards to, there's just not enough people from an operational point of view. So, let's see what the end of the year brings. That'd be interesting.
Yeah, right.
Oh, thanks for dropping that in at the end there, Tony. That opens up a whole can of worms, doesn't it?
So on that note,
there is something I would like to mention, and that is, and Tony's touched on it there with the furlough. A lot of brokers, not all, but a lot of brokers are under the misapprehension that a lot of the service problems are related to more volume than these lenders have experienced before. Was not necessarily the case. So the volume is there, but they've dealt with high volumes before. It's not all to do with the fact that they've got people working remotely. For some lenders, it is as well. The reality is that as things have got more complex for brokers, which all brokers can understand, right? I think there'll be things are hard to work. That's also the case for lenders, right? The lenders are now having to assess mortgage applications in ways that they were not before, and that's only slowing everything down. You can add all of the other factors in, But that, you know, that furlough point that Tony made and a bunch of others all make signing off a mortgage application a lot harder and a lot slower. And it doesn't take much if you're a volume lender and you've got your processes, you've got your systems that work, you know, very well for some. Well, let's not mention any names, but very well for some pre-COVID. It doesn't take a lot for that to come off the rails, right? And that's the situation that I think a lot of lenders find themselves in, and it's hard for them to overcome that. I think it's easier for some of the smaller societies and specialist lenders to overcome those points. But I just thought, with Tony's point now, I just thought I'd make that point, try and get everybody to understand what some of the lenders are experiencing at the moment is hugely frustrating for brokers and their customers. But I hope that helps a little bit.
Yeah, no, absolutely. No, well, that's been brilliant. I think that's it for now. Sadly, time is of the essence, but I just want to say thank you so much for all your time today. To be honest, I've truly appreciated it, and we've had some really valuable insights and information, which I think we can all learn from. From myself and Pepper Money, we just want to say thank you so much for all your ongoing support and for joining us today. So your partnership is invaluable. We just need to work together to make this mortgage market even more successful than it is. So thank you very much. Really appreciate it.
Thank you, Caroline.
Thank you.
All right, take care.